Welcome to the Rent Roll Queen podcast. I'm your host, Tarsi Taylor, and today's episode is sponsored by Buyer Rent Roll. Are you paying too much tax? Today, I chat with Andrew Buckley from Hall Chadwick, Queensland, about how you can minimise tax. Welcome to the show, Andrew.
Thank you, Tarsi. Happy to be here.
Oh, it's great to have you on the show. Can you please tell us a little bit about yourself?
Yeah, my name is Andrew Buckley. I'm an accountant at Hall Chadwick, Queensland. Been there for about almost 9 years now. So
yeah, wow.
Basically just part of the furniture there. So yeah, I work in business structuring, and yeah, my day-to-day is helping clients improve their business with their structures, helping them save some tax. And
it is exciting. And Andrew, you are my accountant. You definitely know about structuring and everything else because we've had to work a lot on that on my own business. So
yes.
For real estate business owners, though, they make a lot of money. They do. They can make a significant amount of money. And the biggest issue that when I'm speaking to clients is about related to tax.
Yep.
So how can a real estate business owner basically prepare better for tax restructuring?
Yep. Biggest thing is just to sit down towards the end of the financial year and go, okay, my profit's looking like this. How are we going to look at minimising that tax as much as possible? You know, there's various ways you can do that.
Run me through those.
So I guess biggest thing is just maximising your super contributions as much as possible if cash flow allows for it. There's a lot of considerations you got to take into account.
Yes.
Cash flow, business owners obviously know cash flow is very important. So, you know, making sure your cash flow is right for starters, and then if you can, it allows you to make super contributions to save tax, then great. Also, just trying to bring forward expenses if you can, because that brings the tax deduction forward a year rather than back a year, which is obviously helpful because otherwise you're waiting a year to get the benefit of that tax saving. And then also trying to defer income if you can as well. So in terms of, so say if you've got an invoice that you want to bill, you know, around 30 June, see if you can just push it back to 1 July or 2nd of July, because again, that pushes that tax back a little bit.
Oh, well, that's interesting to be able to do those things, because one thing, like we're speaking about minimizing tax, right? There's a lot of clients that I speak to and they're like, oh my God, I've received this tax bill, but I haven't made any money. I don't understand why I've got this tax bill. Can you explain how tax actually works?
Yeah. So basically how it works is if you're on an accruals-based system, which is basically the invoices that you bill out to your clients and invoices that you receive from, you know, suppliers or whatever, the profit from there at the end of the year, you get basically taxed on.
So the income that you earn minus the expenses of that year.
Yep.
And then all of a sudden it just shows, oh, I've made this amount of profit even though the cash flow is not there.
That's right. Yeah. So your cash might have been going out onto loans because that doesn't sit in your profit.
Yeah, right.
That sits on the balance sheet. So, you know, you might only have, I don't know, say you've made a profit of 100 grand for the year, but you've only got 10 grand in the bank. You've obviously got a lot of loans or bills outside.
Right, that reduce it.
So, yeah.
So how then can business owners better prepare for that? Because, you know, they go, oh my gosh, I've got, they buy a rent roll, for example, and obviously you've got a loan against the rent roll. So you're paying out all this additional money to repay I guess it's the principal, isn't it? Because the interest actually is part of the expenses.
Yeah, the interest is it's tax deduction.
Yeah. So then how can a business owner better prepare knowing that their profit's going to be higher than what their actual cash flow at that time, like what cash they've got in the bank is?
Yeah, so basically if you know your profit's going to be quite high and you've got a big tax bill, basically just planning for it is the big thing. Cash flow, manage your cash flow and make sure you go sit down at the end of the financial year, like I was saying before, like sit down with your accountant and go, okay, how am I going to plan for this? I know I've got a tax bill here. My cash isn't looking too good, or is there ways I can possibly, you know, get into a payment plan with the ATO or when you lodge your tax return, or just, you know, holding out on lodging your tax return for as long as possible so you can push that tax bill.
And how long do we have before we have to actually lodge our tax returns?
Well, it depends. So it depends on basically the size of the business and amount of income or tax you have to pay. So it depends. It really depends. So, but most people and most businesses is 15 May.
15 May, okay.
Yeah, if you're lodged through a tax agent. But, there's some businesses do 31 January, 1 December.
Oh, so it varies depending on the business itself.
Yeah, that's right. Yeah.
Right.
So it's all comes down to income levels and some tax to pay as well. So
yeah, so one thing that we do as well, you and I, is because originally I used to wait till, the 30th of June, and then you and I would sit down and all of a sudden be like, all right, we've got to find this for the tax bill and all the rest of it. But now we do these quarterly catch-ups.
Yes, that's right. Yeah.
And they are fantastic.
Yeah.
Like, it's just so amazing that you've basically put KPIs around my actual business.
Yes.
And now you're showing me, can I actually hit these?
Yes.
Were they realistic or were they not?
Yes.
So can you run through how we could better, as a business owner, could better work with their accountant to structure so they don't have this enormous bill at the end of the day? Because a lot of businesses do, where it's last minute, oh my God, I've got to find this money.
Yeah, exactly. So those quarterly catch-ups are good. So you know where you're sitting actually more regularly than if you were to sit at an annual one, like I was saying before. But you do those quarterly catch-ups, and then you also, because those quarterly catch-ups is about business performance and about, what can I actually do maybe throughout the year as well to help save some tax. But the big tax planning session that we sit down with a lot of clients is they find very beneficial to work out, because you look at not just the business itself, but you look at all their personal situation as well, what they've got in their personal names, any type of other entities that they have that we can potentially
lean on
and exactly. So try and do certain things to help minimize tax, and obviously as best as possible. So
it is better to kind of do it throughout the year versus just 30th of June.
Yeah.
And I call you one of my A team. You are one of my A team.
Yeah.
And the whole idea behind my A team is that I can basically continue to fly and move forward. It's
100%.
I've got big goals.
Yes.
So for me, it was coming to you and going, and I remember our first meeting, I literally walked in and I just went, here's how I see my business.
Yeah.
And I remember you and Cameron, you both just looked and was like, okay, all right, well, we have a fair idea of what you want now. And that's the thing for real estate business owners, it's about planning, right?
Yeah.
So planning's a key to success.
100%. Yeah.
And when they can come to their accountant with a plan of, hey, this is what I want my business to look like. I've seriously thought about it.
Yeah.
I've really considered all aspects of what I want. I've considered how to grow my actual rent roll, the size that I actually want to get to, how many salespeople I want in my business, all of that structure. Then they hand it to you and you go, okay, I can work with you behind the scenes to make this actually happen.
Yeah.
And through that, how can you then better help us to prepare to minimize tax?
Yeah. So I guess understanding, where you want to be in the next 1 year, 3 years, 5 years, and your vision for your business and your goals, that allows us to understand, okay, what structures do we need to put in place to help minimize your tax or protect assets or anything like that.
Right.
So, just having a good grasp of, where you want to be and what's the ultimate goal.
Yeah, because it's not you don't just have to have a company, right? There's different structures. So can you run us through a couple of the different structures that would help businesses?
Yeah, so it's all based on, there's not a one-size-fits-all approach. It's all based on certain circumstances and what we think, works for that person in that business. But there's, companies a common structure, trust is a common structure, partnership, and there's a sole trader as well. So it really depends, where that business is in that life cycle and, where that business wants to go and, the certain circumstances of that individual.
So with a trust, why would you take the business to a trust?
So basically, you're able to distribute profits tax effectively. You can have a corporate trustee for asset protection, which is basically a company as a trustee. So that'll basically saying that company is the legal owner of the assets and is basically that runs the trust, then is responsible for the liabilities of the trust. So that it's effectively almost in a company structure, but there's obviously you're not in a company structure, so you don't pay dividends from a trust,
right?
You don't get the company tax rate directly through a trust. You can through distributions,
right? So that is a way of minimizing your
Yeah.
tax, because you can basically like outsource it to wherever it needs to go.
The beneficiary, wherever the distribution goes to that beneficiary, that's who pays the tax. The trust doesn't pay tax.
Yeah, right.
So,
and so do you have to be a certain size for that structure to work?
Oh, look, if you get up to a certain point and then you got to weigh it all up. It's not,
There's no one size fits all on this one, right?
You weigh everything up, and then you go, it's kind of when the profits reach a certain level where you think, oh, okay, this is probably time to move. But you can manage those profits effectively still, even if you have like a bumpy year, you can still manage those profits tax effectively through a trust.
Yeah, right.
But you might just go, okay, it's time to move to a company. Yeah, it's individual circumstances. So.
Yeah, because it's not only just the business itself, you take all their personal.
Yeah, that's right.
Like what happens behind the scenes.
Into account, and we work out, okay, is this the right option? So.
And that's the thing, right? A lot of people don't realize you are your actual business. Like you who owns that business, you are the business.
Yes.
It doesn't matter if you have staff or anything like that goes into that business. You are the business. So when your accountant can understand, like I've come to you and gone, this is what I want in my personal life.
Yeah.
This is how I spend money in my personal life. And let's face it, I like to spend money.
Yeah.
So, but I do a lot of investing as well, right? Because I reinvest in my own business continuously because of where I want to go.
It's very important.
Yeah. So. And then what I have with you is, if I want to, I can ring you up and say, hey, can I spend money?
Yes, exactly.
And you can go, no. And then I go, too bad, I'm going to anyway.
Exactly. So it's one of the big things is, and I see it clients a lot, is sometimes they make big business decisions without consulting.
Yeah, right.
Which is you should talk to your advisors, trusted advisors, and say, okay, is this a good business decision financially?
Yeah.
Can I afford it? And even if you're on the cusp and you're like, I just want to do it, and that's fine. But at least you talk to the advisors, everything's out on the table, then you can make an informed decision from there. So.
Well, it is about being informed. And like I said, you are part of my A-team to make the magic happen. So it's really important to me as a business owner. And, I know I get to work with business owners all the time, and I constantly am referring them, you need to speak to your accountant.
Yes.
Because there's questions that they ask me that I can't answer because I'm not an accountant. I'm not an advisor. So it is about going, hey, you need to speak to your accountant with regards to this. Ask them, is there a better structure that you can create in your business to minimize tax? Because we're obviously, 30th of June, now we've got a big tax bill. Yeah. What are we going to do? And a lot of real estate agencies, business owners get caught out.
Yeah.
That's where they get caught out. Like I've seen businesses have to close because of a tax bill.
Yeah. Yeah.
So it's so important, to actually go through and, for somebody who's coming into the industry and goes, I actually want to own my own business. They're a salesperson. They've been running, they've been running in sales for a long time, or a property manager, and they go, it's time for me to go into entrepreneurship on my own. What sort of questions should they be coming to you and asking?
They should be coming to us and just asking, say, what structure do I need to be set up in from the start? What's best? Basically, they'll come to us or, their accountant or whoever and go, okay, these are all my personal circumstances. This is the business that I'm running, and what's going to be the best structure for me. And then when you get up, we'll set that up and go to start it from there. Yeah, basically just coming and saying, this is my goals. How can you help me achieve it? And then we can say, this is what you can do.
Yeah.
And then basically they should be basically coming and asking, how do I set my cash flow up correctly from the start? Making sure I'm planning for that, getting a cash flow statement sorted, cash flow forecast sorted, and then, just making sure that their budgets are right.
From the very beginning,
they're budgeting correctly and they're understanding how to budget.
Yeah. I struggled with that.
Right. We're getting through it.
We're getting better.
Yeah.
That's because I have multiple ideas, and as business owners, we do have ideas that just download and we go, oh my God, that's a great idea. Let's chase it. Yeah. Chase the sun basically. Yeah. And we go through it, and it's really important. And it's been important to me. I had to really shift my focus. Yeah. But once I made a decision that I need my A team.
Yeah.
And then we started really having better conversations because I really took it serious.
Yeah.
Now I actually feel confident in being able to create the business that I've always dreamt of. And the same with real estate business owners, you know, it's really important to be backed by the people that can give you the right advice. So you are minimizing your tax, you know, like that's really important because it's important for cash flow.
Yes, 100%.
That you are minimizing your tax. But it's also about growth.
Yes.
Because the banks are going to look at those profit and loss statements. That's part of it. You know, if you want to grow your business and you want to buy whether it's a house, a car, a new rent roll, like, and you want to add it to your business, they're going to be looking at that. So it's really important to discuss that.
100%. And, you know, one thing that we talk to clients about as well is actually meeting your bank covenants for your business, you know, and how you can, you know, make sure your finances are in line and check, so that you're meeting your bank covenants and if you're monitoring them quite closely as well, especially if the business is maybe not having a bit of a downturn.
Yeah.
Monitoring closely, saying, are you meeting your bank covenants? Because one of the strongest relationships in business is from what I've discussed with clients and you and everyone is basically bank. That's one of the strongest relationships you should have.
Yep.
Your accountant and your lawyer.
Yep.
So they're
part of the A team.
Yeah, exactly. So that's very important to monitor that and to make sure you understand what your bank covenants are as well. So,
and build a really good relationship with your accountant and you know, your solicitor and so forth, and your bank manager.
Yes,
because they are the people who will actually help you propel forward. Yeah,
100%. Especially if you're trying to get a loan and you're on the cusp, but the bank, you've got a good relationship with your bank manager, and you know, they know that, you know, you're all right and you do your very best to meet the repayments or whatever.
The other thing that I like is I can literally go, hey, I'm doing this. Yeah. Can you speak to Andrew? Yeah. He'll let you know anything that you actually need to know.
Yeah, exactly, yeah.
So I outsource it.
We get lent on all the time, which is, you know, what we're there for. So
yeah, and as the business scales and grows, Hall Chadwick can do so much more for the business, which is amazing. Like every time I ask you, okay, well, when I get to this level, can you do this for me? And you're like, we can do whatever you want.
Yes, yeah. We're quite a large accounting firm, mid-tier accounting firm, and we got a lot of resources out there and different resources we can lean on. And so, we've got clients that are very large to small. So it very big range and a lot of different contacts that we can help.
And when I talk about that, guys, just so we're clear, it's about like money management. So in other words, you can outsource your money management to somebody like yourself who can actually be in behind the scenes and help you control that to go to that next level, especially if you're going to be growing substantially and very quickly, because let's face it, there are real estate businesses that, you know, they're buying rent rolls maybe 2 or 3 a year or, you know, 1 every year. They're scaling rapidly.
Yes, yeah.
So it's really important because then you can turn around as well, and this is what I love. Hey, Tars, we need to restructure in this way.
Yes.
Hey, you've got trademarks. We need to put it in an IP company. Yeah. Like, I loved when you just went, this is what we need to do to protect you.
Yeah. Yeah. That's what our main priority is, our client.
Yeah.
And, you know, we want to do our very best by our client to make sure that everything's right and to help them succeed. So, yeah, that's our main focus for client focus and orientated. So if there's something that we think that needs fixing or tweaking, then we'll let them know.
Yeah. So. And I do instruct you. I'm always like, make sure I don't pay much tax. Like, here's what you need to do. And that's the main instruction is minimize it for me.
Minimize, yep.
Yeah.
Yep.
Yeah.
So, and we obviously, there's only so much you can do, but we'll do the best that we can.
Yeah.
That we can just on that as well. So obviously minimizing tax is important, but you don't just want to go and spend $1 just for the sake of saving.
Yeah.
Whatever the tax rate is,
in
your applicable tax rate. So, because if you don't really need it, but you're like, oh, my main goal here is to save tax.
Yeah.
Then
you're reducing your cash flow, aren't you, more than anything? Yes. And instead of like having the mindset, oh, I've got to reduce or minimize my tax, it should be, I'm profitable.
Yes, 100%.
I've got cash in the bank. Yes. I've got cash flow. Oh my God, look at my business. So there's so many different like attitudes that you can basically take
100%
to create everything.
Yes, 100%. So your main focus should be being profitable, and then from there, minimizing tax.
Yeah. Yep. Well, I love that. And it's also about just having conversations with you. Andrew, I want to say a humongous thank you for coming on the show today. What I'll do is I'm going to put all of your details in the caption.
Perfect.
And anybody who would like to reach out to yourself, they can do so and have a conversation with you about restructuring, minimizing tax, and basically how to build their business successfully.
100%. No, reach out if you've got any questions. So happy to help.
Thank you.
Thank you, Tarsi. That's great.